Welcome to Technical Tuesday. This is Federated Zach, Senior Trading Strategist here at CMTrading. And today I want to break down MACD. Now MACD stands for Moving Average, Convergence, Divergence. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. Okay, so MACD, let's break it down. Let's discuss what it is. So MACD was actually the first indicator that I actually learned when I first studied about trading the financial markets. And I remember this like yesterday. My supervisor, or the person that was teaching me how to trade, his name was Mitch, and he said, when you see this, you enter the market. And when you see this, you exit the market. And I said, come on, it can't be that easy. And sure enough, there were several trades that I took that really played out like that. And it was just marveling. It was just very exciting to see it in real time and to actually profit from it even more. Okay, so what does MACD stand for? It's a moving average. So it has that element of it. And it's a convergence when 2 points come closer to each other, divergence, and then it moves away. So it basically, okay, in simple terms, in English, it uses a moving average with a progression with momentum into anticipating if that momentum is really real and we're going to see something actually change. So what is it used for? Okay, it's used for one or two real purposes. It's either overbought or oversold kind of elements where the markets are just way overbought or way oversold, either direction. And you're really looking for that sweet point to just enter the market where you see at the beginning of the trend, at the beginning of the flip or the beginning of the swing backwards, okay, or upwards or downwards, whichever direction it's going, that you're able to anticipate it and enter at that level, okay? And it also is used for the beginning of a new trend. And that is really the same thing, okay? It really gives you that element of entering the market at the pristine, and this is really important, that pristine level of entering it as that new trend is being formed. Now, in front of us, we have our regular chart, okay? And you populate the MACD, which is down here, okay, using a toolbar at the top of the MT4 trading platform. Now, if you look, it is basically a moving average. So there are going to be two time frames. It's usually 9 days and a 26 days. So you have a longer time frame and a shorter time frame. And it's ostensibly when the shorter time frame overlaps on the longer time frame, that's when you see where it happens. Now you'll see this upwards momentum right here. Okay, this upwards trend is signifying down here. Now, if you look at the red line, okay, or vis-a-vis the yellow line, which are the two moving averages, when that crossover actually happens and you see it continuously going higher and the red line is above the yellow line, that's where you're going. You're looking at that crossover where the red line crosses over the yellow line and it trades above it. And that's really where that trend is actually being formed. And it 9 times out of 10, it'll actually follow through. Now you do see it at the bottom, which is an oversold level, and you do see it at the top where it's an overbought level. So it's relative to itself and relative to where it's standing within itself at that moving average. So it's really very simple, very effective, and a great tool to trade the financial markets. Thank you for joining us today. We'll see you here next week on Technical Tuesdays.